I want to show you something before we start the weekly analysis, and please listen carefully, guys, because yesterday I have posted a video of my live trading of the news of the non-farm payroll, and I received a comment saying that he's trading on a demo account. It's not live account. I'm here to prove that this is live account. This is my live account, guys. This is my balance for the end of the week, and here let me just try to drag the screen without showing the number. As you can see, it is indeed my live account. So what I'm doing here is, guys, I don't want to show my trading account number to the public on YouTube. I have done that before in the past, and it was a mistake. I received also that time messages telling me, why did you show your trading account number on public? That is not safe. That is not good. So for my own safety, I don't want to show this number, and I don't have to prove every single time that I'm on the live account. All the live trading videos that you are seeing are based on the live account only. I don't need to do it on demo. There are some videos on demo, but I have informed you that it is on demo account. So please be aware that all the live trading videos that you are seeing, guys, are made only on the live account. But for my personal reasons, I don't want to show the account trading number. That's my own personal life, and please don't interfere with it. So again, everything you are seeing happening only on the live account. So let's now begin analyzing the market, and as usual we will start with the Euro USD. But before that, please don't forget to hit the like button and subscribe to the channel. Now first of all, the first look at the Euro USD on the weekly chart. Let me just tell you something. What we are having right here is actually a broken level of support trend line, and again I am right now on the weekly chart. So therefore, we are having here a broken support trend line, and as you can see, a clear bearish breakout from that level, and last week has actually closed as a strong bullish engulfing candle. That indicates that the Euro USD is most likely going to continue the rise till it reach, first of all, the broken level of support trend line, and also that level of a resistance right here at 1.10140 will most likely also be revisited again and retested. So for that, we have to consider buying this pair for the next week. Moving now to the daily chart. Now here on the daily chart, what we are having here is a clear also broken level of a resistance trend line, as you can see. And right here we are having the also bullish breakout candle from that level of a resistance trend line. Also another confirmation that the Euro USD will continue the rise. The final confirmation is, of course, the multiple retests right here, or reversals from the support zone, as we can see right here at the bracket of 1.05580. So 3 confirmations to tell us that the Euro USD is indeed going to continue the rise. Now moving to the 4-hour time frame, or actually let's stay on the daily chart. Right here on the daily chart, one of my strategies, guys, is always about looking to buy the market at the nearest resistance to the bullish breakout candle. So right now we can see that the Euro USD is actually facing right here a resistance zone. So there is a possibility on the next week for having a pullback. If that happens, we can buy the Euro USD exactly right here at the nearest level of a key support to that bullish breakout candle. So just to make it clear, we can buy exactly right there. Just right there exactly. Why right there exactly? Because here we are having a key support level, and this right here is the nearest support to that bullish breakout candle. So that's the reason I'm going to suggest you to guys to buy the Euro USD right from that level, and that can be actually our safe zone, just a little bit higher than that level of a support. That means that our safe zone can actually be ranging just slightly for about, let me just go to the 4-hour time frame. The safe zone is going to be ranging for 65 pips, and the take profit level actually can be placed exactly right there at the nearest strong key resistance level, as we can see right here. This was, of course, a previous key level of a support, and there lies the nearest key resistance level, and that means that our take profit level will be 114 pips of profit. Moving now to the pound USD. Alright, so again, the pound USD also, if we look at the weekly chart, has also a very similar analysis to the Euro USD. We're having here, of course, a broken level of support trend line, and apparently the pound USD is indeed going to continue the rise till first of all it will be retesting the broken level of the support trend line, and also it will be revisiting the highest level of a resistance at 1.31930. Indicates also that we're having here a strong bullish movement that can be confirmed by how the last weekly candle closed as a strong bullish engulfing candle higher than that level of a previous resistance at 1.22855. So another confirmation that we're having a strong bullish movement right here on the pound USD, and we can start buying it. However, if we look at the daily chart, there exactly we're having, let me just be precise, exactly right there, we're having first of all the top level of the resistance right here, and also it was the bottom of the support. It was of course the key support level, and I think if we check the resistance trend line, check this out, that is actually interesting. Right here we are having also a broken level of the resistance trend line, and by saying that we can expect from the market to make a pullback right here, and then we can start buying the pair right after creating a new support trend line. So that being said, let's wait for the pound USD to fall to another 45 pips before we can start buying it. The safe zone shouldn't be ranging much lower than this level of a previous resistance zone right here, and the take profit level that will be aiming the nearest key resistance level to our entry, which is right there exactly at 1.25059, because we are buying right here at the previous resistance, which will be of course a new support. So that means based on the 4-hour time frame, exactly we can buy from there. Our take profit level will be 175 pips against 88 pips of a safe zone. Moving now to the AUDUSD. Again, very similar analysis to the previous two pairs. Based on the weekly chart, we're having a strong bullish engulfing candle above that level of the resistance, which was in the past also a support, which indicates also that the AUDUSD is going to continue the rise to retest the broken level of support trend line right there, exactly right there. So therefore, the AUDUSD still has about 150 pips more to go. So moving now to the daily chart, we can see a very clear level of a key support right there exactly as 0.64577. The best level to start buying the AUDUSD will be right here after the market falls to another 54 pips and make the retest of the broken level of a resistance right there, and retesting the broken level of a support exactly at the same level. So just to make it short story for you guys, we can buy the pair exactly from that level, a safe zone that shouldn't be ranging lower than the bottom of the support right here at 0.63862, aiming of course the highest level of a nearest resistance exactly at 0.66106. That means that our safe zone will be ranging for 71 pips against 153 pips of profit. Let's now move to the USDCAD. Alright, so now for the USDCAD, if we look at the weekly chart, we are having here also a strong bearish candle that actually has failed to create a new level of a previous support. Has failed to create a new support right here exactly on that level of a previous resistance. Indicates that we are having here a failure in the breakout from that level. Also indicates that this is eventually a fake breakout. So for that reason, I believe that the USDCAD is indeed going to continue the fall till it reaches the nearest level of a key support at 1.34420. So moving now to the daily chart. Now as we can see guys, what we are having right here is of course a clear Fibonacci retracement, and check this out. Right here the Fibonacci retracement is telling us that we have here a strong bearish breakout candle also from that level of the support. So this was right here the bearish breakout from the support, and therefore we can expect actually for the next day on the opening market on Monday to make a pullback right there, and we can sell the USDCAD exactly right here at the nearest level of a previous resistance to the new support, sorry, to the previous support, I mean, sorry. So therefore we can actually expect the market to rise again to another 42 pips before we can start selling it. What's wrong with me? 4-hour time frame. Now on the 4-hour time frame, we just need another confirmation to sell the market exactly on that level, and that can be found exactly right there. If we check here the trend lines, check this out. That's great. So right now we are having a resistance trend line with 3 attempts at least, which has also become here a small support trend line. Then instantly the market has made a strong bearish breakout from that level. Now if the market will fall again and then retest the same level again, it will be retesting the same level of a broken resistance trend line, and from that level we can start selling the market, aiming at least Fibonacci 61.8 level. That means that we can actually expect 120 pips profit from this signal. And of course we can sell right there exactly at Fibonacci 38.2, and the safe zones shouldn't be ranging higher than the previous level of a key resistance right here at 1.37437. Let me now write the signal for you. Let's now move to the USDCHF. Alright, so let's take a look at the weekly chart for the USDCHF. Now what we are having here is a strong level of a resistance that actually has been confirmed to be a very strong level. Of course, it was a key support right there in the past, as we can see. So that means that this level of a previous support is now becoming a new resistance. However, what we are having right here is a total of 1, 2, and finally 3 attempts of the resistance. That means that the USDCHF will at least continue the fall till it reaches the lowest level of a support right there as 0.89996. That means that the pair still has about approximately 90 pips more to go. Moving now to the daily chart. So now we have confirmed that the market is going to continue the fall for around 90 pips, right? Now it's the matter of where exactly we can start selling, because our take profit level has already been determined. Moving now to the 4-hour time frame. Right now on the 4-hour time frame, what we are having right here is a very clear level of a resistance trend line. Check this out right there exactly. So that means that we have to look at the left side to find the nearest level of a key resistance or a key support on the same level. That can be found exactly right here. Exactly, to be precise. Yes, exactly. So there we're having the nearest strong key support level, and also it was a resistance in the past. It was finally right here the previous level of a support right before the bearish breakout happened. And now we can confirm also this entry by looking at the resistance trend line. So that means that we can sell the USDCHF after it rises to another 27 pips, aiming 115 pips of profit, and a safe zone that shouldn't be ranging higher than the peak of the resistance at 0.90755 for about 56 pips only. Let's now move to the NZDUSD. Alright, so the NZDUSD, as we can see, is still rising. And again, if we look at the weekly chart, the market right now is actually on a resistance zone. However, we're having here a very strong bullish engulfing candle, indicates that we can buy the NZDUSD at the retest of a broken level of a previous resistance and a support as well. To find that, let's now look at the daily chart. Now right here on the daily chart, what we're having right here is of course a broken level of a resistance trend line, as you can see right here. So that means that we can actually expect from the market to make a pullback somewhere, and then we can start buying exactly at the nearest support to this entry. So moving now to the 4-hour time frame, just to find the perfect entry to start buying the NZDUSD. Now, how do we find it? Because right now we don't have here any strong key support level in the horizon. So how can we confirm the strong level of a support? The answer lies, of course, with the Fibonacci retracements. Always, if you cannot find the strongest level of a support or a resistance, you can always rely on the Fibonacci retracement. It's your always savior, and it can give you a perfect entries and exits as well, because it's not a matter of where exactly we can start buying, it's also a matter of where we exit our trades. And as we can see right now, the Fibonacci is telling us that the safest entry that you want to have is going to be lying exactly on that level of the support. But let's just have some thoughts about that, shall we? I mean, yes, it is indeed the safest entry, but the problem is that's going to happen after the market fall to another 65 pips. I mean, I'm sure that we can buy the market, of course, at a higher level than that. I doubt that the market will continue the fall to this level for one reason. Let me show it to you. What is the reason, Salah? Let me show it to you. If we check the Fibonacci from this higher high to this lower low, what will gonna happen? This market has actually made a strong bullish breakout from 61.8. Let me show you. Check this out. So the market has indeed made a strong bullish breakout from 61.8. Indicates that this is no longer now a downtrend. Look at that. This was a downtrend, but now it's no more a downtrend. Now it has become an upper trend, because the market has made a strong bullish breakout from 61.8. That means that we can buy the pair exactly right here at the previous level of 61.8. That is gonna be actually a better entry, and as we can see also, it's matching up along with the previous level of a key support just to have precise entry. Exactly just like that. So as we can see, it was a strong key resistance level in the past, it was a strong key support in the past as well, and right here it was the nearest key support level to the current bullish breakout candle. So for that reason, I would say that we can start buying the pair after it fall to another 51 pips, aiming at least the highest level of a resistance right here at 0.60552, which means that we can expect approximately 113 pips profit from this signal, and a safe zone that shouldn't be ranging lower than the key support level, as we can see right here and right there at 0.59002, ranging for about 45 pips. Let's finally move to the gold. Alright, so now as we can see, guys, based on the weekly time frame right now, the gold is actually on a very strong bullish movement, and it seems like the gold will continue the rise at the moment. Right now, I agree, we are actually on the highest level of a resistance, but now the gold is under a lot of pressure because of what's happening right now. Of course, we all agree that the war in the Middle East right now is actually pushing the gold to rise against the dollar, and for that reason I believe that the gold is indeed going to continue the rise. So moving now to the 4-hour time frame. Now based on the 4-hour time frame, what we are having right here is a clear support trend line. Check this out. Right now what I'm expecting actually from the gold is to continue the fall, retesting the broken level of a support right there, exactly, just to be precise, right there, exactly right there at 1974.79. That's actually going to be the best level where we can start buying the gold, but not yet. Wait, there is more into it. We will buy the gold sooner than that. However, we have to look at the left side right here, and as we can see, first of all, that level right here is actually more interesting to me. 1981.46. Why it's more interesting level? First of all, this right here was the strongest level of a key support, and it also has been facing a lot of fake breakouts right here. Second of all, look at the resistance right here. Number 1, number 2, number 3, and finally number 4. So there was actually a lot of attempts of a resistance right on the same level at the bracket of 1981. And recently right now, the gold is actually showing right here a strong bullish movement above that level of 61.8, combining it now with the support trend line. As we can see, most likely buying right here is going to be the safest option when the market is actually going to be retesting, first of all, the support at 1981.46, and also will be respecting the broken level, or not a broken level, sorry, the continuation of the support trend line. So by saying that, let's buy the gold exactly right here at 1981.46, and then our take profit level can be placed right here at the highest level of a resistance at 2009.60, aiming approximately 281 pips profit from this signal, and the safe zone that shouldn't be ranging much lower than the lowest level of a support right there at 1968.17 for about 133 pips. And there goes your weekly analysis, my friends, for the gold and for the USD pairs for the upcoming week. I hope it's going to be a safe week and profitable one to everyone here. And of course, don't forget to join our free group of Telegram and the VIP group of Telegram as well to receive up to 5 signals every day. So until then, guys, I hope that was informative to you, and I would like to thank you for watching.